Good afternoon, everybody. My name is Juvenal, and I'm here to give you folks an update video in the overall markets into today's price action. So I want to go over the S&P 500. I want to go over the Qs first, and then afterwards, I want to talk about a couple charts I did decide to take more profits on. I want to go over the metals, and then if we have enough time, I will go through Moderna because I've had a couple people send me some messages about certain levels, and I do apologize because I made that video very quick, and it wasn't very detailed. I just wanted to get that alert out for you folks what I did because it was one of the positions that we were studying. And plus, it's a very volatile stock. It was a biotech. You just never know with those things. It could get to major resistance and then it can immediately like plunge like 30%. So I wanted to give you folks that very quickly. So it was very rushed. And I do apologize if it appeared that way, but because it was just very rushed. I wanted to get that video out, and let's not waste any more time. Let's go right into the S&P 500, and we're going to go over all those good things here. So starting with the S&P 500, we got the parallel that we were talking about earlier in the morning, and then also we were talking about if we're going to get confirmation of the breakdown of this parallel. So what I said was I want to see a body close below the breakdown low, because remember we did confirm the breakout of this parallel, but for me on our rules, the same way we confirm to the upside, we need to confirm to the downside, right? So we need to see a body close below the breakdown candle low. So this is our breakdown candle right here. This one right here from yesterday, basically August 18th. So that's the candle we're monitoring and we're basing our confirmation signal. So did we confirm the breakdown today? The answer is no, because we never had a body close below this breakdown low right here. But I must say today's price action was certainly not the greatest. And then also, if we put in our volumes, we had a good amount of volume into today's price action. So that raises probabilities just in the near term that maybe we do get confirmation, right? That maybe we do get another red day tomorrow. But let's talk about to the intraday price action. So we gap down in the morning, right? So we no wait, let me see. That's this one's Monday. This was today, Wednesday. So we actually gapped up early in the morning. Then we rose up, filled the gap over here, right? Got close at least. We kissed it. So here's the gap fill. Here's a technical gap fill right there. So we didn't actually touch it. We kissed the level. So we kissed the level, and then this blue trend line is from our parallel. So we kissed both the gap fill and the top part of our parallel channel, and then we got rejected. We attempted to make a bounce, and then we just sold off pretty much all day, right? And then we closed at the lows. That's not something you really want to see, right? That's not strong price action. That's very weak. So this is a negative the way we acted today, but we were just watching to see if we got confirmation today of the breakdown. So we did not get confirmation of the breakdown, but at the same time, today's price action was certainly not the greatest. But I find it fascinating, and this is a good example and good lesson on gap fills. When you get a gap, usually it's a very psychological level where investors, let's say someone went heavy over here, and then now they got deeply in the out of the money. Well, they want to get back to the break even. So that's why you technically see a lot of sellers in the technical area of gaps, either to the downside or to the upside. So it would be vice versa to the downside. There, you would meet more buyers on the gap over here for this instance, for an example. That's why I say this area would be support, because buyers who were waiting or who got left behind, they're going to be eyeing this area because it's a psychological level as well. People who are anxious to get in the markets, now they got the opportunity to get in, and vice versa the other way. When it stock gaps to the downside, people just want to get back to their break evens. They're down on the position, they want to get back to the break evens. It's scary, right? So that's why there's that psychological area. That's how at least I interpret gap fills, and it makes just logical common sense, right? So it's all about psychology, looking at the levels, looking at the technical analysis and indicators, and see what you can make out of these things, right? That's how I read charts, at least. So today's price action, did we confirm back inside the parallel? The answer is no, because we never had a body close below the breakdown low. But we were concluding that today's price action was a negative, which raises probabilities that we're probably going to retest our former all-time high, which is what we discussed, right? And I do think we're going to retrace to the gap fill. That's my thoughts, right? So we're probably going to retrace to the gap fill, and like I stated before, And even if we do go lower, let's say we pierce it for some reason, right? Market sentiment gets bad or whatever, we go a little bit lower. We got that wedge pattern, remember, that we were studying before? Here's that wedge pattern that we were studying before in our previous videos. So let me see here. There it is. So it would be a healthy thing, I would think, that we would retrace to then find the next leg higher. Because on a technical analysis basis, this is a wedge pattern. We closed above, we got confirmation, and we're probably just doing a healthy retrace. So we can even pierce the gap fill. So the gap fill might be a good day trading opportunity to go long on a day trade, but also watch for it for maybe a swing trade, right? So, but for me at least, I wouldn't touch it until we get a retrace of the wedge pattern. For me, I think this would be the more higher probability, right? And I want to put in our moving averages, and we were talking about how there's the 21 SMA right at the gap fill, the 50-day SMA right at the top part of that wedge pattern, and it would be a healthy thing to do a retrace to, for then I would think we would find a leg to go higher, right? And I would probably cover my short. So that's what I would probably what I would do, because the thesis was broken. I shorted the gap fill over here. I could have taken profits these two times over here, but I was waiting the break of this trend line to go to 7,000. But we never got that. So instead, we had the wedge pattern that played out and confirmed, and now it's doing a retrace. So on a technical analysis basis, if we do get a retrace, that would be a healthy thing. And then that would tell us that we could probably find ground to go and get our next leg higher to maybe test this middle part of our bigger time thesis parallel. And you can see, let me show you that parallel. So here's the parallel as we're zooming out right here, right? Where we're connecting from our COVID low, liberation sell-off low, and our bull run high of 2021. We get that parallel right here. And this, every time we touch this middle part of the parallel, we were met with some heavy resistance there. So I would think we kissed it, we didn't quite reach it there. So it wasn't really a kiss. There was a big gap right here. So I do think I find it strange that we didn't get there. So I would think maybe we're just going to refuel, get a snack, get a drink, take a little break, and then get up here. That's my thoughts, right? But watch to see. There's always that possibility where we don't hold it, right? And what if we don't hold it? Then we talked about that in our morning video, that maybe then I would look for this trend line over here, right? But then that's a bad thing, because that would be a failed breakout of this bull flag slash wedge pattern, right? And big moves come from failed moves. And then look at how many times we touched this trend line. Once, twice, here we kissed it, three, four. And then if we ever do come down here, it would be five. The more times you hit a trend line, the more susceptible you are to break. And then, like, again, if we get to this part over here, not only would you have a failed breakout, now you're testing this trend line multiple times, you're more susceptible to break, and then there's no support here, and then you would go probably to 7,000. But like I said before, that's too early to state any of that. But I'm just stating scenarios. That's not my base case right now, because on a technical analysis basis, we did break out of this wedge pattern, and we did confirm. And right now we're doing a healthy retrace. Okay, so but also one thing I told you folks to watch out for is watch to see if we're forming negative divergence. So we can see here. Let me put the price action. We made a high here, higher high here, high, and this is a technical lower high on the RSI, right? And this red trend line, for those who are wondering what that is, that's basically from our 2-month thesis, and that's our negative divergence, our 12-year negative divergence, where we're piercing it right now, and we still have 11 days before this 2-month candle prints. So that's what we were studying about and talked about in this channel, and what I stated earlier in the morning. But what is one thing that's a concern right now is the stochastic RSI. We did confirm the breakdown on the stochastic RSI. So the 70, so both the orange and the blue are below the 80, right? Orange is at 71.14 and the blue is at 50. So my thoughts are this also raises probabilities that we're going to probably go back here to retrace over here, right? So again, I don't think it's something to be concerned of right now, but just wait and see. If we do close below and confirm back inside the wedge pattern, then that's the failed pattern, right? So again, we're watching this retrace of this wedge pattern, but we're also studying the parallel. And remember, if you look at it from the lens of the parallel, we would probably retrace back here to this middle part of that parallel, and that should be technical support. So, and then again, let me draw that trend line from our wedge pattern. Look at this. X marks the spot right here. So I would think this area 7,554 would be our technical area support. That's what I'm going to be looking for, at least. I can only speak for myself. But remember, we were also talking about 2 videos ago, 2 episodes ago, how we put it to question this bull flag here when we were looking to the 4 hour chart. And I said, guys, in the shorter time frames, it doesn't really look like a bull flag anymore. I said it looks like a rising wedge pattern, and usually rising wedge patterns, they're actually bearish. So let me draw that for you folks. So we were looking at it like this. So rising wedge pattern with negative divergence on the RSI in the shorter time frames, those yield moves to the downside. And I thought, and I said in that video, we would probably just go down here to test this top part of parallel and then maybe find support, then maybe go up here, but it didn't. It actually gapped down. So it ended the day right here, Monday. Ended the day holding onto the parallel, then we gapped down on Tuesday. And then right now we did a retrace to fill the gap and the top part of the parallel, and we got rejected there on good amount of volume. So that price action in itself is bad. So this tells me maybe we might want to go a little bit lower, and then that would tell me that raises probabilities that we might confirm the breakdown to get back inside the parallel, test the gap fill, and probably test the middle part of the parallel, as there's this area of technical support here from this pivot over here, former all-time high. So that should be support, right? So that's what I'm stating. That's what I'm looking for in the S&P 500. Let's jump over to the Qs, right? So again, let's go to the daily chart. And for the Qs, we got to get off logarithmic. And then let's go to our green list over here. So we've got our portfolio here in the Qs. Here we are. So we did hold the top part of our parallel because remember we broke out and confirmed. Now we did a retrace into the parallel, and I said watch to see if we hold it. It should be technical support because we confirmed. So this is what I kind of expected the S&P 500 to do, but we didn't. On the S&P 500, we actually closed below the parallel, and that's a warning sign, right? So but the QQQs, they did hold the parallel, all right? So there's a little bit of strength in the Qs, and right now in the post market it's a little bit up. So let's watch price action in the intraday price. So let me get off and let's go on regular trading session here to see today's price action. So today we actually came up higher, then we sold off, then we had a nice bounce. So we pierced the parallel, and then we had a reversal signal here. We came up, and then we sold off, and then we just stayed flat for the rest of the day. But it's very, very interesting how we held that top part of the parallel. So that's what this blue trend line is right here. That's our parallel. So it's interesting to see that and how we were gapping up on the post market. So it's really cool to see how the technicals are working where we confirm we broke out, raises probabilities that this should be support. And right now, the technicals are being respected in this trend line, in this chart. But this is our new trend line that we're monitoring, where we're connecting our all-time high and this high from June 22nd, and you get this trend line. And I said, watch this area. Let's see if we get rejected there. We pierce it. We never touched it, so we technically kissed it, and then we got rejection, and we retraced here. So for me, we want to see this hold, right? But now, since we gap to the downside, this is now a technical area resistance right here, the gap fill. So watch the gap fill. If we do a retrace tomorrow, watch to see the 729.87 level. That should be a technical area resistance. So maybe a good day trade shorting opportunity right there. That would be a nice day trading opportunity to short right there. But again, you can't just close your eyes and just short right there. You got to watch price action, see if there's a negative pattern of some sort. And if it just blows through that, then watch this trend line right here, right? This should be resistance right here. But the major line in the sand would be the all-time high. We have to make an all-time high. And like I stated in our previous videos, if we don't make an all-time high, guess what? This is still a technical lower high. And then from there, if we do go lower, we better hope not to make a lower low, right? So we're trying to fight the trend. We broke out of the parallel, but for now, that's a positive. That's a step one. It doesn't mean that we negate the whole bearish sentiment, right? Or the bearish trend, because we are technically making lower highs and we're making lower lows, right? You can clearly see that. You can't argue with me about that. That's just a stated fact. Look at this right here. We're making lower highs and lower lows. That's a bearish thing. So we need to break the trend. If the market and the Qs want to keep going higher, we need to make an all-time high, have multiple daily closes above, and then that would tell us we're going to go much higher, right? And then maybe the measure move of this bull flag could play out, right? A move 45 consolidation. But right now, we got to wait and see, right? So right now, we retraced it. That's positive. We hold it for now. That's what we want to see. But in the case we do break this parallel, like I stated in a previous video in the morning, I'm watching to see, do we hold this gap? So that would probably coincide, go hand in hand with the S&P 500 filling its gap over there, and that's that $700.54 level, right? And then also, if you put your moving averages, there's the 21 moving average right here, the 100 moving average down here. That's going to be another technical area of support. So I really love this area of support right here, where you had the moving average right here, the middle part, our downsloping parallel channel, and this yellow trend line comes from the pivot low from June 9th. And then also you get this other blue trend line is from our bigger parallel coming back from the bear market low of 2022, liberation sell-off low, and our the bull run high of 2021, right? That's what that top part of the trend line is. So you have multiple levels of confluence right here at this area of like, let me see here, 689.45, right here, this area right here. And then from there, this is what the bulls should see. If we do fail to hold the parallel, watch to see if we can make a higher low here and then try to reconquer the parallel. Because if we do that, look, then it would start to tell us that we're making a change in trend where we can make a higher low, right? That's what we want to see, because if we make higher lows and then we start making a higher high, then that could tell us that we're making a change in trend, right? That's what we want to see. But right now, it's too soon to say that we're changing trend, because right now, as we're rolling over here, this is a technical lower high. We need to make a higher high, right? Or if we do start to roll over, at least try to make a higher low, right? And then make a higher high. So I hope I'm being very clear. If you have a question, leave your questions in the comments, and I'll try to answer anyone who's confused out there, because I know we got a lot of new traders, we got seasoned traders, we got from all levels that are watching, and I'm just giving out things very quickly as we only have like 20 minutes in this video. But that's what I'm watching for, folks. So if we do fail to hold the parallel, again, to recap, watch the gap fill. All right, watch the gap fill. This area right here, 700. And if we go past through that, I would watch this area of like 689 right here. Somewhere around here, there's multiple levels right there. The 100 moving average, the low pivot from June 9th, and the middle part, downsloping parallel channel, and the top part of our upsloping parallel channel. Lots of support right here. I would think that's major. Get a bounce from there and try to make a higher high if we do start to go lower. And then, I mean, try to make a higher low and then try to make an attempt to make a higher high. And if we fail to do that, then I guess, we're going to go lower. But for now, it's too soon to say that, because we did confirm the breakout of this parallel and we did a healthy retrace. And right now we're holding support. And then the post hours right here, it's gapping up. So again, for if we do go up, resistance is going to be this gap fill right here, 729.87. That's a technical psychological level area of resistance, right? So that's the level I'm going to be watching for, maybe a potential day trade, and then connect these highs over here, right here, high from June 3rd and the high from June 22nd. This is going to be another area of resistance. I would consider this one minor. And if we do get through that, the final line in the sand for the bulls to conquer is make an all-time high and at least have multiple daily closes above it. And then that would tell us that the bull run will continue. We're going to go much higher. And then from there, we're going to act upon other things as well. So for me, that's what I'm watching for in the markets. Those are my levels. And let's go over some charts here. We got 2 minutes here. So I did take profits on CrowdStrike. CrowdStrike, let me show you folks that. Let me pull up our paper trading account. Let's load that up. And then you can see right here. So yes, I took profits here. I went short right here at 223.51, and basically it hit our price target of 10%, which we went lower right here. We covered right here at $203.18. Beautiful gain. We entered with 1% of portfolio. Could it go a little bit lower to test the lower part of the parallel channel? Yeah, it probably could, because remember, we got an upslope and parallel channel with negative divergence. The stochastic RSI cross is confirmed to the downside, but we hit our price target. We got what we wanted, and that's it. Could it go a little bit lower? Like I said, yes, it could. It possibly could, but for me, I don't get greedy. We're short-term swing traders. Well, I mean, I can only speak for myself. I'm a short-term swing trader. I take a couple bites of the apple, throw away the apple, find a new apple, right? So that's how I operate. So we got a nice gain from that. And then also I took profits on XRP. Beautiful pop in XRP. And then I'm looking at the double leverage ETF, and we had like a 13% gain. It's going a little bit higher here, but it was a beautiful breakout here. But we haven't confirmed. So we never confirmed. So I decided to take profits. If we do confirm, I would wait for the retrace on XRP to go long again. All right. So that's what I got for you folks. I'll go Moderna on another video.